Today, I want to talk about which pair you should pick for trading, and I want to give you some tips that I've learned over the years and things that you need to consider if you're a beginner in the world of forex trading. Um, I've been trading forex since 1999, and back then I had to wake up at like 2 o'clock in the morning, 3 o'clock in the morning because I was day trading because when I started, there were no mini accounts or no micro accounts. So it was each lot was worth $100,000, and each pip were worth $10 per pip minimum, and that was even more than that on pairs that were moving a lot. So the things that you need to consider is one, this your time zone, when where you live, and when you want to trade. The first thing that to consider is, let's say you're in the US, then what you can do, like what I did eventually was I traded the US Canadian, and I found that the US yen moved well as well during the day. There were relatively big moves over there, and at certain times I also traded the New Zealand USD and the Australian dollar crosses in the evening. So for me, Eastern time, I would trade at like 7 o'clock at night, and then until maybe 10 or 11, and then I would go to work the next day, and I did that for a few years. I also did the night shift. The night shift was the euro, the Great Britain pound. So you have to get yourself on a time frame with the London market, because this is where most currencies move the most. If you're really if you're a day trader and you're a momentum trader, then, and in my experience, the best currencies are related to the Great Britain pound. Euro is all right as well, but nothing close to the Great Britain pound in my experience. The next thing you need to consider is your account size, because different pairs, depending on the volatility of the pair, will demand higher margin. So if you're trading a mini account where a pip is worth more or less $1 per pip, then and if you start really small, then you don't want to trade a pair like the Great Britain pound versus yen, or the euro Australian, or the New Zealand yen. These are very volatile pairs that demand more margin and have bigger moves during a day. So these will wipe, if you're starting, like, you're gonna wipe out your account. I don't want to bullshit you. If you're a beginner forex trader, the money you put in the first time, second, third, fourth time, you're gonna wipe it all if you haven't figured out a lot of the concepts that I want to talk about in this series about trading for beginners. So take into account where you live, take into account the account size that you have. Sure, you can start with a demo account and try to figure out which strategy you want to use, which time frame you want to use. Do you want to be a day trader, a swing trader, or are you working? Because if you're working, you won't have time to be a day trader. Most likely, you will have to do some type of swing trading that requires less time from you, because you can be glued to the computer 24/7 if you're working somewhere else. So until you build your account up and you can quit your job, then trade either demo accounts, but sooner or later you're gonna have to put some emotions into it, and the only way to do that is by having a real account. It doesn't matter if it's a small one. Like, you can get a $200 account and get started with a micro account and start practicing with real emotions. Because even if it's a small amount, once it's real money, it really starts to get to your emotions quite quickly. So that's the second thing to consider, is the margin requirement of the different pairs that you trade. And the other thing to consider is if if you're a beginner, you need to realize quickly that if you're trading the Euro USD, the Great Britain Pound USD, and the Canadian USD Canadian, you're all trading relative to the US dollar. So you're basically over leveraging. So it's very important when you get started that you realize that there's not that many crosses that don't cross over, if you will. So I'll give you an example. Let's say we have the great GBP, JPY. You have the Great Britain pound versus the yen. So that's one cross that you can trade. If you want something that's not related to it, not too much anyways, you have the Euro Australian. That would be another option, but these are volatile. And then if you want another one, then it would be the New Zealand Canadian. So now these three pairs have eliminated 6 different currencies, but much more than that if you don't want to be too related. So if you want some sort of diversification, you want to go into crosses that are not too related as far as the currencies that compose these pairs. That's very, very important when you get started, because otherwise you're just gonna overextend yourself. In around 2008, 2009, I used to work as head trader for a prop trading firm that was dealing in stocks, and my job was to hire and then coach and teach and coach the new traders. I would hire 10 or 12 traders per month or so. I would train them for a couple of days, and I would put them on the floor with a couple hundred shares on 4 different stocks. And then they would have to reach certain targets within a certain time frame, and then they would move on to the next level and trade 200 shares, 400 shares, 800 shares until they made a living out of it. So I'm telling you this because I know what I'm talking about when I say that you need to really, really start small if you want to get in the world of trading, but that's a different subject from the video today. So the next thing I want to talk about related to the which pair to pick is that there are what are called baskets. So if you look at the US dollar here, if you go on TradingView and you type US dollar, this is one thing that you can use. It is at certain brokers, anyways. With my broker, it is, I can trade this directly, but it requires more margin than most US related pairs. So what you can do for this, and this is what I want to teach you here, is that you can, let's say, okay, you want to trade the US dollar. Right now, what I'm seeing, for instance, is that we went into an exponential move over here, and it went beyond this resistance. And what I would like to see here, if I go on a smaller time frame, let's go on the 4-hour chart. What we see here is a double top. This is it's not yet quite confirmed, but let me just redo this real quick. So the idea here would be that if we break this, like right now it bounced off, so I'm a bit worried, but what this is a Adam and Eve double top. This is the name of this pattern, but now it kind of did a fake out over here, so it's not quite confirmed yet. But now we're seeing pattern in a pattern, so this is bearish for me anyways. So what I would like to see would be to establish a position is I would like to know which pair to pick. Let's say I have a small account and I want to figure out which pair. So what you can do with TradingView is you click that plus over here, and then you can enter every pair that you're willing to trade that has to do with the US dollar. So we'll put in Euro, we'll put in the Great Britain pound, we'll pull in the Australian. What else do we have? New Zealand. We have the yen. We have the CHF. And let's put in one last one. Let's say US Canadian. So what this does is it puts on a percentage basis the last move. So let's say I go on a daily here, and what I want to do is I want to find the bottom of that last wave. So it's around here in 2021, and I'll back up over here. So within the last move of that wave, you can compare which pair has been the most aggressive to the upside and or the weakest, because this is US yen. So the US dollar is buying more yen, so the yen is the weakest compared to the other ones. And then on the flip side over here, it's the New Zealand yen. So these two pairs, and even this one looks pretty weak. So Euro, New Zealand, and USD yen would be candidates. So now I have my candidates. So if I want to take a position on US dollar, but with different pairs, these three would be the candidates. So the one that's most obvious here is the USD yen. So let's go take a look at that chart. So USD yen. Let's look at the weekly. Yeah, so this is a very exponential move. So whenever you see an exponential move like this, it's going to end badly. So what I would do here is go onto a smaller time frame. I would try to trace a support and resistance from here. Perfect. So this is the channel that I'm dealing with here. This is how I trace my stuff. So right now, what happened is it was trading in a channel, more or less, on, and then it went way beyond the over here the resistance, and it puked. And what this tells me is that the move was overextended here, and now it went into. Let me just try to trace this. A megaphone type of structure, and if it breaks this, it's very bearish on this. But you know, just from I'd be curious to see what happens here. But if you let's say there's a few ways I could trade this. I could short right away, which I've done. And I could also short on the break of this. If ever I see price comes back over here and hangs around, or breaks and comes back, like you can trade on the break, you can trade on the pullback as well. So let's say it starts to puke like this, and then breaks. You can trade the break, or you can trade the bounce off of it, or you could trade, it depends if you think it's going to still keep going. But this is not a course on technical analysis, but what I want to show you here is the process that I go through in order to figure out, okay, I think the US dollar is overextended to the upside. Like, this is a hockey stick, and these don't last. They might keep going if the government keeps printing money like this, but it could also weaken. So the best pair that I would find here would be the yen, and then let's take a look at the New Zealand. Yeah, so this is the another shape that I often trade. It's a triangle, and then what I was seeing here is that we puked beyond it, and then it moved back in. So this is a sign of strength. So, and because the waves are kind of accelerating over here, like this is going slow, this is going faster, and this is going even faster. So these types, when there's less and less time between during the waves, then eventually you come into an oversold situation like here, and then the bounce is usually quite aggressive. So So that's how I would play the US dollar, comparing different pairs. So that's what I wanted to share with you guys. Some of the ways that you can find trading ideas and trying to figure out the optimal way to play a move if you want to go against the US dollar. We could do the same thing. There's another basket here called the JPY basket. This one is a bit younger. There's only data up to here, but same principle. So what you would do is press this and then add all the USD yen, Euro yen, GBP, JPY, CAD yen. What am I missing? Australian yen, and so forth, and then figure out which one has been the worst. So depending on where you start, these numbers will change, of course, because they all start here. So what I do is I try to figure out from this move, let's say you started here, then the one that USD yen again. So it's the US dollar. So we came to the same conclusion because right now we had the US yen as an analysis with the US dollar here. But you get my drift. So let me know if this was helpful to you guys, these short videos. I could do a bunch of these trading for beginners. And I'm working on some other stuff as well to give a full course on technical analysis, but that's going to take me a while. So I'll see you guys in the next video or next year.